like to do before we start the discussion is just to hand out these rate tables. Just hand it to you. If you could just pass it around the room, please. We'll be talking about these over the course of the next 45 minutes. These are basically our rate tables, which distill all our information, all our understanding about premium taxes in Europe. And we'll be talking about this later on. If you have any questions about those, then please do ask.
So we would like to divide our presentation into a few sections. The first one will be introduction of FiscalReps. Then we will speak about the process within FiscalReps, how we manage information, how we gather information, how we store it. And the most important thing will be the FiscalReps rate tables. You can go through these rate tables for now, and then we will speak about them in more details later on.
So what we're trying to do here is to talk about our best practice at FiscalReps in obtaining this global information. And what we do is we look at the sources of information available to us. So it could be the legislation, the tax authority guidance, case law, or it could be our own dialogue with each of the individual tax authorities across the world. There may be situations where we need to rely on local sources. So we've got our local associates in each of these different countries. You've seen Studio Areti from Italy today, Leitner from Hungary. It could be that we're working with a trade association, so we're working with ANIA in Italy with regard to some of our queries in that particular country. And it's more often than not the tax authorities as well. We're talking to the tax authorities on a regular basis to ensure that our understanding and our clients' understanding and interpretation of legislation, case law, guidance, etc., is consistent with the tax authorities. Now, the aim of distilling all this information into documents such as what we call the FRED, which is the FiscalRep electronic database, we try and call it the rate table now, but the purpose of doing this is to try and help our clients to be compliant on a day-to-day basis. So in other words, file the correct amount of tax at the right time to the right tax authority. By doing that, we avoid interest and penalty charges, we avoid setting provision in the financial statement. We can ensure that the premiums are priced correctly. So if there are exemptions available in the legislation, then we can inform our clients about that. That means the clients can take that saving to the P&L account, or it could be they reduce the price of the premium, or it could be a combination of both. The other aspect is around contract certainty, which was an issue that reared its head about 4 or 5 years ago, where insurance companies were undeclaring premium taxes in particular countries. And where there was a tax audit and there was an outstanding amount of premium tax, we found that insurance companies were recharging the policyholder an amount that they weren't expecting, which didn't put an awful lot of goodwill into that relationship, and it caused a few problems. So by getting the correct premium tax rates means that you get that contract certainty as well. And of course, what we always want to avoid is reputational risk. We've seen what's happened to the likes of Google, Amazon, and Starbucks just recently in the papers. We just don't want to go there. We don't want to see any of these situations escalate in such a way that it's going to hit board level.
So by way of introduction, as you know, FiscalReps was formed by Mike Stolley in the year 2003. We focus on 4 main areas, which are outsourcing, technology, consulting and training. In terms of outsourcing, we specialize basically in keeping our clients compliant. So we file taxes, we pay premium tax to the tax authorities, and then we save these tax returns for our clients. In terms of technology, as you have probably heard before, we do have 2 types of software. One of them is Taxbox, which is used by our employees within FiscalReps to check the data, to validate the data, to file and prepare tax returns on behalf of our clients. Then there's a Taxbox, which is sold to our insurance companies, to our clients. In terms of consulting, we do have a few country specialists and local tax advisors who help us to understand IP regime across the Europe and the world. And we, for example, do have Spanish employee. We do have tax specialists from France and Greece, Italy as well. The last point, but very important point, is the training, where we try to share our knowledge with our clients and potential clients as well. So FiscalReps offer these 4 solutions. However, this is not limited. There could be some more potential consultancy or other tasks.
So when we look at the premium tax landscape around the world, we can see that it's quite complex insofar as within trading blocs like the EU, we don't see a consistent approach to premium taxes. We see that with VAT, where the VAT regime is held together by the EU directives and individual tax authorities will interpret that. With regard to European premium taxes, these are national taxes as they are across the world. And as such, they're subject to their own rules, regulations, and case law.
Yeah, you could be looking into, across 28 European countries, European member countries, you could be looking into approximately 92 European insurance premium taxes. I'm sure that this number will not be the same next year this time. We'll probably have more insurance premium taxes across Europe. Across Europe, you can have simple insurance premium tax regimes, like, for example, in the Netherlands, where you have one insurance premium tax. However, you could come across countries like Great Britain and Germany, where you have two insurance premium taxes and there's a fiscal charge as well. Other countries like, for example, Spain, Italy, they do have some provincial filings, so the requirement to file provincial returns is, again, another burden and a cost to the insurance company. Then you could come across countries like, for example, Czech Republic, which are trying to implement the insurance premium tax regime, but currently has nothing in place. When we are talking US, I think that it could be quite complex. We are talking about 50.
Yes, in the USA, we've got federal taxes. We've got 50 separate US state premium tax regimes as well. So we need to be mindful of the fact that when we're writing business into North America, into the United States of America, those premium taxes are going to be layered at different levels. The same applies in Canada as well, where we've got 10 provinces and 3 territories. And Canada's always seen to be one of the most difficult areas in the world with regard to premium taxes. And that's partly down to the reason that legislation was introduced in the 50s. As we were talking about earlier on today, the global programs have moved on from that. We're looking at large global programs. And what we're seeing in Canada now is that the tax officers, the tax authorities, have taken a slight divergence from the legislation. So you may be reading the legislation, but it may not actually be the practice employed in that particular country. In China, for example, we've got federal taxes, but we've also got 34 cantons, 32 of which have their own taxable premium taxes. And they could be as diverse as a waterways tax or environmental charges. So again, we need to consider that. Now, FiscalReps is moving out from Europe into the world, and so we're looking at the G20 countries, we're looking at the financial centres such as Hong Kong, Singapore, and we need to take into account what is our best practice when approaching these different regimes. And it could be that we can do this work ourselves when we're looking at the English cultures, such as the countries there, Canada and the US. It's a lot easier because the legislation is out there on the websites, we can talk to the tax authorities, we can establish a rapport and working relationship. The difficulties arise when we're dealing in countries such as China, such as Russia, where you need somebody on the ground to help you. You need somebody to take you through the local culture, the language, the politics, just to get a sense of where those tax authorities have come from, get a sense of how you can work effectively in each of those different countries.
What comes out of this overview are two important questions. Who is the taxpayer and what is the location of risk? So in terms of the taxpayer, usually it's the policyholder who pays the tax to the insurance company, but it's the insurance company's responsibility to pay these taxes to the tax authorities on a regular basis. The location of risk rules is very important and key point, I would say, in most European countries. However, there's an exemption, for example, in Switzerland and Liechtenstein, where the key point is the location of the policyholder. In terms of our sources, we are looking, as Paul mentioned, we are looking into local legislation, but important starting point are European Non-Life Insurance Directive. As you all know, there are 18 insurance classes in place. However, the first European Non-Life Insurance Directive presented only 17 classes of insurance, which starts with accident class and ends with legal expenses. The third Non-Life Insurance Directive from 1992 implemented the class 18, which is assistance related to road assistance services, and also cover holiday insurance. So definitely there are 18 insurance classes defined in non-life insurance directives. However, across Europe you could get more insurance classes. Good example is Hungary, where you have 19 insurance classes. The last class of insurance is the funeral assistance. We haven't seen this insurance class across other European countries, but Hungary do have 19 insurance classes. So you can see that IPT regime across Europe is not harmonized. It could be different from one country to another, and understanding of these insurance classes is very important for each insurance company.
So this is essentially our process in obtaining the information, maintaining that information. And it'd be very interesting to know how you guys go about doing this, whether it's similar to what we're doing, whether it's different in any way. But essentially, the first port of call will always be the legislation. It'll always be the legislation. Now, if it's in English, that's great for us because we can use that language. If it's not, we need to think about an accredited translation, or we then think about Google Translate, which is perhaps not the best way of going about looking at the legislation.
Not always.
We've seen errors in the past that have been carried out, and we try and avoid that by going down the accredited translation route every time, just to get that absolute certainty. But of course, the cost of doing that can be prohibitive. If you're familiar with the IPT regime in the UK, with the primary and the secondary legislation, there's a lot of information there, so that when it comes to getting an accredited translation, it could be a significant amount of money there in terms of our costs. So when we're looking at other countries, such as Russia, such as China, where do you start with your legislation? Where do you look? Where do you explore around the legislation there? The thing to note about legislation is to use the most recent form of legislation as well, because on the internet there are many forms available out there which go back some years. And if we think about, well, can you think of any examples?
Luxembourg?
Luxembourg.
Yep.
In Luxembourg, the legislation goes back for the Fire Brigade tax to 1939, and that's signed off by Adolf Hitler. Now, when that came to my desk for review, I thought I was being wound up, but that is actually the case. And when you look at Luxembourg IPT legislation, you may be looking at the legislation, but you need to be aware there are a number of circulars and bulletins that come out on a regular basis that will update that legislation. So what you're reading as maybe a finance act or whatever it may be for that particular country will not hold all the most relevant information there. So you just need to be mindful of that.
Yes, and the legislation could be clear in some cases, like in Germany, you have got strict legislation which is clear to almost every single insurance company in the market. However, there could be some countries like Hungary, Switzerland, Liechtenstein, where the IPT legislation is not that clear, and in that case we need to look into tax authority guidance. The tax authority guidance provides supportive information, some clarification in terms of the legislation, and it should have additional information to the legislation as well. So as I mentioned, you can see tax authority guidance, for example, in Hungary, Switzerland, Liechtenstein.
And then we look at case law. This is the one aspect that always worries me when working in a new country, because you need to know where to find that case law. It's going to be filed somewhere in the tax authority website or in the tax authority guides. It will be there somewhere. It's just a case of finding it. And in France, for example, we found case law that relates to motor insurance. Whether or not a typical policy is connected to motor insurance, meaning that a certain rate is applied. If there's a disconnect, then a lower rate will be applied. In the UK, we've come across just recently the HomeServe case, whereby we were looking at how is a taxable premium defined for IPT purposes. Does it include third-party administration fees or doesn't it? And so therefore we need to look at that case law very carefully to understand how certain terms in the legislation are defined, because the legislation won't hold those definitions.
In case of none of these 3 points answer our questions, we need to get into dialogue with tax authorities, which means that we will approach tax authorities, we ask them certain questions, and then we wait for the answer. Usually, in ideal world, it should take a couple of days, but sometimes we come across that tax authorities are not sure about the answer, so they need to investigate, they need more time, and sometimes we get the answer after a few months, years. It depends on the question. But this dialogue with tax authorities is very important for us because we get the certainty, we get the sign-off from tax authorities, and that gives us certainty that we do have correct information.
Very good case in point is Finland. There are a number of exemptions available in the Finnish IPT regime, and there are vague terms such as personal, such as credit, which will allow an insurance company to apply that exemption to a particular product, to a particular policy. The difficulty lies, what does that term actually mean? And so we entered into a very long-winded correspondence with the Finnish tax authorities to find out what, for example, is the definition of the term personal. It wasn't until we travelled to Helsinki and met the tax officer concerned that we found out there isn't a definition. You can effectively use your own definition, but until you find that out from the tax authorities, you don't know. And I would advise anybody that if you do use an exemption around personal, that you support it with the relevant data, you support it with the relevant conversations with the tax authorities. But at the end of the day, what the tax authorities agreed with FiscalReps is that they will use our rate tables, which you've got out there, as a basis to look at the premium tax rates in Finland. Because there isn't that definition out there, they've accepted that what our understanding, what our interpretation is okay until the legislation is amended.
And it's also very good to have a confirmation from tax authorities, because once we have a confirmation, you know that this is the correct information, you are sure about the application of IPT rates. The other point is country info manuals. These country info manuals are basically manuals which are prepared by FiscalReps employees, and they store information, very useful information, from registration requirements to co-insurance arrangements, treatment of negative insurance premiums, and whether you can settle these negatives, put them through the return or not. Then we come across, we mentioned tax authority confirmations, and
one thing I would just say about when dealing with the tax authorities is to ensure that you're talking to the right person. We were, I should say, talking to an officer at the Inland Revenue in Malta in relation to marine policy. So I wrote a letter to the tax authority asking for the liability, and I gave the supporting documentation as to why we thought this 10% rate would apply. We included the policy document so they could see the type of risk that was insured under that particular policy. Now the tax officer said 10% applied. My colleague Nick Hammond wrote 6 months later with the same question but for a different client, and was told by the same officer that an exemption applied. So when we went back to the tax office and said, well, what should we do in this case? Because you've given us, not two officers giving us two different pieces of advice, it's the same officer. And when we asked her what we should do, she said, well, the tax is subjective, you can take your own view. If you want to apply the exemption, you can. If you want to apply 10%, you can. So my former life in the accounting firm, this was manna from heaven, but we don't do that now. We take a very compliant culture here at FiscalReps, whereby to work closely with the tax authorities, we will always be seen white and white by the tax authorities. So we pointed out this discrepancy, we found the right answer, and we moved on with the Maltese tax authorities.
The important role is the role of country specialists within FiscalReps. Each country specialist gets in touch with the tax authorities on a regular basis to keep our information up to date, to maintain a good relationship with tax authorities, and we find it very useful for any dealings with tax authorities. And as I mentioned, if there is any unclarity, we do contact tax authorities directly to get their point of view, their confirmation, which gives us the certainty of correct information being held in our database.
So the rate tables that we pass around, just to give you an idea of how it's structured. This is for Bulgaria. We deem this to be one of the more easier countries to look at in terms of premium taxes. There's only one premium tax in Bulgaria, that's IPT. On the left-hand side, if we walk across the columns, we've got the ISO country code. Then we've got the tax code according to the business class. And what we found with a lot of insurance legislation is that the rates will follow a particular business class. This is one of the reasons we've gone down this particular path, as well as looking to standardize the approach from one country to another. The tax point in Bulgaria for IPT is cash received. It's when the insurance company or the broker on behalf of the insurance company receives the premium. The rate model is a taxable premium, and we discussed what is a taxable premium. Does it include third-party administration fees or not? And then the rate is 2%. If you go down to the aviation class, which is number 5, you'll see an exemption applies, and our footnote is precise as to why that exemption should apply. It's when there's damage to or loss of an aircraft. It's an aircraft hull insurance class.
Yes. And in Bulgaria, just to complete this information, any insurance related to aviation or marine should be exempted. So when we create these rate tables, the important starting point is the classification of insurance products. So classes of insurance basically sets up the first line where you can see whether there's any sub-classification required. In countries like Bulgaria, you will have only main classes and tax rate applicable. However, in certain countries, and I will take again Spain as an example, the taxation could be more complicated, and you will see in those rate tables there are more subclasses for each main class of insurance. Now, these classes of insurance and subclasses of insurance determine the premium taxes applicable. They could be exemptions, there could be higher tax rates, there could be lower tax rates applicable to taxable premium or sum insured. It again differs from country to country, and it could be different tax regime across one country. We can see it in Spain, where you have consortia paid on sum insured, but you have IPT paid on taxable premium. The other very important point is the tax point, where you can speak about different tax points across European Union. Cash received date, that's usual tax point date across countries like Germany. Return premium date, that's the tax point date in Greece. Invoice date, which almost links to date of issue of the policy in Denmark, is the tax point for tax on non-life insurance in Denmark. Date of maturity appears to be a tax point in countries like Belgium or France, or there could be other alternative tax points, like in the UK you can have 2 different tax points, or in Hungary as well.
Now, tax points bring a slight dilemma for insurance companies when it comes to compliance, because we've experienced with our clients that the reporting programs may only allow for one type of tax point to be used. It could be inception, it could be invoice, it could be written premium, whatever it is, that's used across the board. So it's very difficult for the insurance company to know what to do when it's writing into a number of countries and the tax points are different within those different type of countries. And so it's a case of being aware that for the large ticket programs that are going through, that if your tax point you're using is before the official tax point, you may have a cash flow disadvantage, or if it's afterwards, you may be incurring potential penalty or interest charges. Now, it's really just the large amounts that you should be concerned about, because on the whole, we're looking at monthly filings, but if these are quarterly or annual filings, then these amounts could be quite significant, and it's important as to know which period they should be filed and paid. The other thing, sorry Les, the other thing I was just going to mention, going back to classes of insurance business, again, what we're looking to do is to map our clients' insurance products across onto our rate tables to ensure we're getting the correct rates. And one conversation we had with one of our clients related to a PDBI policy, a property damage business interruption program that was being sold across Europe. And it was very interesting when we were talking to the underwriters as to how we should map this to a particular class of insurance business. Now, some underwriters are very good. They know what class of insurance they should be writing because of their regulatory concerns. Other insurers or other underwriters aren't so sure. And so we were having discussions as to whether or not it should be mapped to class 8 and 9, property and fire, or fire and property, whether it should be mapped to class 13, which is liability, general liability, or whether it should be mapped to class 16, which is miscellaneous financial loss. So having had these conversations, we tried to determine whether or not it was 1, 2, 3, or all 4 of those particular classes of insurance to ensure that the correct rates were applied. Now, it may seem a very long-winded process to go through, but if there are exemptions available there, and these are large amounts, then it may be a worthwhile exercise to go through.
On that point, the very important thing is also the mapping exercise. If you get the mapping right, you know that you apply the correct tax rate. If the mapping is incorrect, there could be over taxation or under taxation, which could lead into potential penalties or interests. So how we use the information? Once we identified classes of insurance, we need to identify the rate models. The rate models could again differ from country to country. You could have different rate models within one country. Again, very good example is Spain, where you calculate IPT on taxable premium, but consortium for PDBI insurance, property damage business interruption, is calculated on sum insured. You could have such tax regime like in France, where you calculate, where you charge Euro 330, it is known as tourism surcharge, as a flat rate on insurance contract. This is payable by insurance company, it's due by insurance company per lead insurance company once per year per insurance contract. This is also due for renewals. The other more complicated taxation could be seen in Hungary, where there's a progressive taxation, where there are different rules to other European countries. And here comes the footnote, which basically explains the specific calculation, the specific taxation in each country. It gives us more details of insurance premium tax regime in that particular subclass of insurance. If there was any uncertainty, as you have probably noticed, there could be a red text in the rate table, which is basically highlighting there needs to be further clarification, further communication with tax authorities. Once this is clarified, the red text is changed to black text.
Interestingly, when we've been talking to the tax authorities, and Finland again is a very good example of this, we still have a red text where the tax authorities are unsure of what the position should be as well. So these rate tables are very much where we are to date. They can change based on new products coming to the market, challenging the existing rules, seeing how the tax authorities work around that. And what these rate tables will do is basically update whatever our learning may be in relation to any of those examples.
And it's important to keep this database up to date because of these changes. They do happen quite often. And this is an example of very simple calculation, very simple rate table, which is Cyprus. There's a flat rate of Euro 2 per policy in certain subclasses, certain classes. And as you can see, for example, in this case, there's a footnote number 5, which determines the tax point in Cyprus. That means that there's not only one tax point, there could be 2 tax points because of these 2 tax rates, flat rates. The Euro 2 charge, for example, in this case for class 10, you have got tax point of issue of the policy. However, if we are looking into another rate, 0.07 euro cents, the tax point will be date when the cash was received by insurance company.
With these huge amounts flying around, we sense a frustration in the insurance market with Cyprus, but it's very important because it's a stamp duty. These insurance documents have to be stamped to make it a legal contract in that particular country. And if ever there was a claim case that goes to court, then effectively that policy is only valid if it's been stamped. So it may be a small amount, but there's another story behind that particular premium tax being paid on time.
The other example is Spain. This is a very good example of more complex country where you have few insurance premium taxes and bar fiscal charges and different calculation methods. So, for example, IPT, this is based on a cash receipt and is charged on taxable premium. It's a percentage of taxable premium which is due to Spanish tax authorities. In terms of 5-year charge, you've got similar model. But in terms of consortia, which are last 2 columns, which is the property damage and business interruption, modulo 10 and modulo 11 in Spain, you calculate these on a sum insured of the property. You have to consider other aspects like what's the property category, what's the sum insured, what's the limit of indemnity, what's the insurance period, and so on. And this basically gives you an idea how complex the calculation can be. In terms of the tax point, for consortia, you are looking at policy inception date, which is again different to IPT, and it could cause cash disadvantage, as Paul mentioned, because you receive the premium, for example, after 3 months, but you should pay consortia surcharge in advance at inception of the policy, which usually is quite high. So to sum up our information, once the information is received, we really try to make sure, to be 100% sure that we do hold correct information. Therefore, we go to tax authorities, we approach them, we do have personal meetings or telephone calls with them on a regular basis to keep the information up to date. As you know, these rates, these IP regimes could change from day to day. Therefore, it is important for us to keep an eye on every single country on a regular basis. The communication with tax authorities almost every single time gives us the confidence that we do have a good relationship with them. Then we do have reliable information, and we do have a backup for our rate tables as well. So once we receive the sign-off from tax authorities, we do know that we do hold correct information.
And we need to refresh that data on a regular basis as well. And what we do as a company is to do that every 4 weeks, every month. So essentially we have 5 people that sit on our technical committee. That's a very grand name, I know. We have 5 people there, and basically each of our country specialists will look at any potential amendments to their particular country. They'll complete a template or show what the current treatment is for that particular tax, what the proposed treatment is, the source of documentation behind that change, and the effective date of that change as well. So effectively, the meeting will consider each of these changes. If it's approved, it will go onto the rate table on that particular day. If it's rejected, then we may need to look at the particular change in more detail. It may be that we need more source information. It may be that we go to the tax authority and continue those discussions because we're not entirely convinced that we've gone down the right path. And Malta was a very good example of that. The idea is that we document all our changes as well. It's very important that we have an audit trail because we have so many countries. You're looking at just the European rate tables there, but we have so many countries that we need to have everything in place to support what we're doing on a day-to-day basis, because this rate table is challenged on a regular basis. It's almost challenged on a daily basis. So we need to be absolutely sure of the source information behind that documentation.
So as Paul mentioned, there's a technical committee which meets up on a regular basis, so any change needs to be approved, needs to go through 5 people. If there is a disagreement, it needs to be clarified and clear before we approve any changes. This slide shows you a very good example of a footnote which is very detailed. This is a Belgium INAMI, and as you probably know, in certain classes in Belgium you apply 6.56% INAMI rate to insurance premium. However, if you do not know the fire element of the premium, you should proportion the premium as per this footnote basically. It gives you an idea that certain risks insured should have certain fire element, and then you calculate the INAMI on that fire element. This footnote example gives you an idea how important certain footnotes are, because it could mean that you could charge 6.56% on the whole premium. However, if you were looking into correct information, you could have an advantage in front of our other competitors, other insurance companies, because you would apply 6.56% to correct premium.
So the final slide, you'll be glad to hear. What we try to do over the last 45 minutes or so is to give you a sense of what the premium tax landscape's like. It's not straightforward. It's not harmonized in any way. We mentioned that VAT is harmonized in the EU trading bloc. Premium taxes generally tend to be national taxes. They're governed by their own legislation, case law, guidance, etc. They've got their own rules. And so with that type of landscape, what our best practice is to look at the legislation, to look at the tax authority guidance, to look at any potential case law out there, to talk to the tax authorities on a regular basis, and then most importantly, to have that refresh capability and have people dedicated to that particular task to ensure that information is always live, it's always real. So essentially the benefits of having this, as we mentioned before, is the day-to-day compliance. It's there to avoid interest penalty charges. It's there to avoid setting provisions in the financial statements. Is to ensure there's contract certainty. It's there to ensure that the premium is priced correctly, and also not just from a compliance point of view, but from a profitable point of view as well. So that's really where we are to date with our managing of premium tax information. If you have any questions, please ask those now. We'll wait for the stone of silence, and then if you want to speak to us later on, please grab us We'll be here for a glass of wine afterwards, so please come and talk to us whenever you like. But thank you very much.
Thank you.